Hello, I'm Natalie Brunell for Bitcoin Magazine, and we have the latest on the third Bitcoin Futures ETF that just launched. VanEck's Bitcoin-linked ETF, XBTF, also known as the VanEck Bitcoin Strategy, is officially live on CBOE. That's the Chicago Board Options Exchange, after the SEC rejected its spot offering last week. Kyle DeCruz is the director of digital assets product at VanEck, and he said, quote, "While a physically backed Bitcoin ETF remains a key goal, we are very pleased to be providing investors with this important tool as they build their digital asset portfolios." XBTF is trading as the lowest cost option for U.S. investors seeking indirect exposure to Bitcoin through derivatives-based offerings. VanEck's fund is listed with a net expense ratio of 0.65% on CBOE and is seeking capital appreciation by investing in cash-settled Bitcoin futures contracts. Now again, this all comes after a very recent and very disappointing rejection of a spot ETF offering. VanEck wanted to provide investors with a product that would invest in actual Bitcoin, providing more direct exposure to the asset's price appreciation by holding it directly. But the SEC expressed investor protection concerns and alleged there's a lack of manipulation prevention in the market. VanEck's derivatives-based offering received the green light for listing in late October. If you recall, BITO was the first Bitcoin-linked ETF to go live in the US and began trading on October 19th. Valkyrie then launched the second Bitcoin Futures ETF on October 22nd. BITO became the fastest ETF ever to reach $1 billion in assets, taking the record from the gold ETF GLD, which in 2004 reached the mark within 3 days. The approval of that original futures-based Bitcoin ETF by the SEC was made possible after the commission's chairman, Gary Gensler, said in September that futures offerings would have the highest chance of approval compared to spot Bitcoin ETFs. Back then, Gensler said that his agency needs to ensure to the best ability that they can bring projects into the investor protection perimeter. He said, quote, "Bitcoin futures have been overseen by sibling agency CFTC for 4 years. That's wrapped inside the 1940 Act, which brings it inside investor protection." Now, it's really doubtful whether a Bitcoin futures ETF would actually offer a higher level of investor protection than a spot BTC one, but the approval of Bitcoin ETFs enables a more competitive landscape and also unlocks new pools of capital from different pockets of traditional financial institutions that were previously facing too many hurdles to get exposure to Bitcoin. In either case, investors can opt for the highest level of protection by buying and holding actual Bitcoin themselves. We believe learning how to become financially sovereign with Bitcoin is an opportunity that will pay dividends over the long run. For more headlines, head to bitcoinmagazine.com.